Let's give you something very important, because the head of Nigeria's Securities and Exchange Commission, Lamido Yuguda, has promised cost reduction of the agency and a return to profitability within the next 2 years, and a surplus of even 1.24 billion naira by the year 2023. Yuguda's promises were made on the back of investigations by a Senate committee probing the SEC's fiscal deficit and other finances. My guest on this is a chartered trader and CEO at Cowry Asset Management, Johnson Chuku. A good evening to you, and thanks for coming through on the show.
Thank you, Boason, for having me. Good evening.
Whenever I get to hear that regulators, in particular market regulators, face financial difficulties, my ears as a financial journalist get tickled. So, but what do you make of the Senate query on the financial position of the SEC?
Boason, my take is that it's been long in coming. As the Senate said, SEC has had negative deficits in its financial reports for the past couple of years. When I saw the report, I actually thought back to the era of Musa Al-Faki, who was then the DG of SEC, and Dr. Ndiokreko was the DG of Nigeria Stock Exchange. And I remember then the talk of the time was that Nigeria Stock Exchange was funding SEC, well as SEC should be regulating Nigeria Stock Exchange. Do you find a reversal of role where the institution that is being regulated was funding the one that was its regulator, because SEC has always struggled to meet its financial obligation or to meet its cost profile. So it wasn't strange. And I think I'm happy with what the DG of SEC said, that they're going to work on their costs and they bring down their costs so that they become a surplus entity, because their business is not really to make profit, but to act as an effective and efficient regulator. So that's their primary objective, not necessarily to make remittances to the Federation account, but the primary objective of regulation. And they need some level of financial resources to be an effective regulator. Unfortunately, if you don't have strong financial resources, you may not have the appropriate exposure and appropriate trainings or the tools you need to regulate effectively. So I was quite pleased with the fact that the DG of SEC has made a commitment that they're going to review their costs and bring down their costs and become a profitable entity or a surplus entity.
Well, Johnson, the SEC, Yuguda talked about 25% of its gross revenues being paid into the Federation account, about 1.5 billion naira paid as at the month of June this year. Is this simply turning the SEC into a revenue-generating agency, not a regulator really for a financial market?
Yes, I think that's, for me, if it's coming from pressure from the Ministry of Finance, it's a misplaced pressure. And consider the fact that at the end of the first half of this year, SEC, the Securities Exchange Commission, reported a 1.7 billion deficit. So you can't be reporting deficit and be making remittances of your surplus. Where is the surplus coming from? Are you remitting capital and digging a hole? I think there's something wrong with the concept of remitting about 1.5 billion annually or even half year when the records are showing that you're making deficit. Take, for instance, the report that was presented to Senate. The report said they made a deficit of 2.7 billion in 2019, 4.3 billion in 2020, and 1.7 billion in the first half of this year. So what would be the basis of remitting to the Federation account? Where is that money coming from? I think that should be a misplacement of priority if it was done as a result of pressure coming from the Ministry of Finance, because we know that the fiscal authorities in the country are having severe difficulties in raising funds. So they may be looking left and right, trying to get money from any of the so-called self-operating entities or self-regulators. But unfortunately, like I said earlier, the priority and the primary objective of SEC is to regulate the capital market as a rapid regulator of the capital market. It's only if they have genuine surplus that they can make remittance to Federation accounts, and not when they are running deficit.
One of the points raised on SEC Financials relates to the staff costs consuming the chunk of its revenue. Is SEC such a very big organization that the salary scale is so huge that the entire staff consume the whole entire revenue? Almost.
When I saw the figures, I couldn't validate those figures, but the figure I saw of about 9 billion as staff costs looked quite excessive. And I also saw the report that said that for 2021, they have projected a total revenue of 11.5 billion. At the same time, projecting a staff cost of 10.2 billion. I mean, that simply means that their forecast for this year is that they would consume entire revenue in paying salaries and wages to their employees. So the first thing I will look at if I were the DG is that today we are talking of technology. I mean, with technology, you can do almost everything, including even supervision and regulation. So I think what they need to do is move a lot away from physical regulation to adopt technology in terms of regulating the market. And that will reduce, obviously, their headcount and reduce their staff cost.
Very, very interesting. You talked about the Musa Al-Faki period at the SEC. If you roll it all the way back to George Akamioko in the early 90s as the Director General of the SEC, the funding, the late George Akamioko, blessed memory, the funding of the SEC had always been an issue because it like cap in hand, begging the government to fund a financial regulator who is supposed to supervise. If you look at the stock market alone, 20.45 trillion naira, and the regulator for that particular market is not even funded well by the government. Talk to me.
Yeah, well, in the first place, SEC is a self-funding organization. It's a self-regulatory organization. It's also self-funding. So it's not supposed to be drawing from the federal government. The federal government is not supposed to be giving it allocations on an annual basis. Be that as it may, the first thing we have to look at is the cost structure. We talked about the cost structure. The next thing is the revenue sources of SEC. And I think, just like Senate members said to the DG, they need to expand their revenue sources. I've tried to look at the revenue sources of Securities and Exchange Commission. One constant or regular revenue is a 0.3% charge on buy side of transactions on the Nigerian stock exchange, on the Nigerian exchange. So, and they don't collect any fee from the sell side. They only collect 0.3%. So if the volume of activity in the capital market decline, as we've seen in the recent past, that will have a direct impact on their revenue. The other sources of revenue are licensing of operators in the market and renewal of those licenses. So I think the issue of licensing and renewal of licenses are few and far apart, that they don't constitute a regular stream of cash flow for SEC. So the SEC has to look at how to expand its revenue sources so that it can actually be financially independent and does not need to go cap in hand to the government to seek for any fund. And once you start that, you lose your independence.
Interesting, this development I was just because how do you think about the oversight functions if you don't have deficit, you don't have inadequate funding, and that goes your oversight function?
You know, that was why I made reference to the era of Musa Al-Faki and Dr. Ndiokoriko-Nyuke. And like I said then, that the concerns were that the Nigerian Stock Exchange had overbearing influence on the activities of the Director General of the Securities and Exchange Commission, while as the reverse should have been the case. And because if there's a saying that he who pays the piper dictates the tune, if SEC has to go cap in hand to any regulated entity to ask for financial support, then it would not have a strong moral basis to.
Yeah, there's a whole lot of moral issue raised there. We appreciate your time on the show tonight. As always, Johnson Chukwu, CEO at Cowry Asset Management. Thank you so much.